David Morgan with you with the weekly perspective on the 5th of February 2017. Well, something that myself and others have harped on for a very long time is what's in one of the chapters of the Silver Manifesto, the debt bomb. Has the bond market peaked? And the answer is yes. The real question is, will it accelerate to the downside? And that remains to be determined. But here's an article straight from Bloomberg. European bonds post worst January on record amid political angst. Accelerating inflation prompts bets for the ECB to ending the stimulus. I'm not going to read you the whole article. What I want to point out is the macro picture, which means there has been a bond sell-off not only in the United States Treasury market, but also in the European Central Bank area, as well as others. So the debt bomb has gone off. It's subtle, yet I'm convinced it's taking place and will continue. And again, to repeat, what's really interesting is where do we go? If we get there slowly and interest rates creep up by the Federal Reserve following the yield curve, not leading it, well, there may be adjustments that can be made and things could muddle along further. I'll certainly say that. However, it could go the other direction, which means that we could get an accelerated sell-off at some point that could turn into a very interesting potential in the debt markets. Someone, if you're not paying attention to, certainly is very much worth paying attention to, and that's Charles Hugh Smith. And this article is one that you should certainly read this weekend or within the next few days. Central banks pull back. Now it's up to fiscal policy to quote-unquote save the world. I agree with him that the monetary policy obviously hasn't worked. All this QE has gone to the banks only, has not gone to mainstream, to Main Street, only to Wall Street. And this is the case being made that with fiscal policy, the government basically pays for projects. It goes right into the back wallets of everybody that's employed through these government programs. Usually it's a public-private partnership. Again, I'm not going to read the article to you, but I think it's very important to understand what's going on from the macro picture. And this is straight from a dispatch from GATA. London gold traders to open vaults in a transparency push. Very interesting situation here. We see that there's been a lot of talk here about what they may or may not do regarding disclosure. Operates around two of the biggest members, HSBC and JP Morgan. And of course, this is all about what's done over the counter, which means that there's very little transparency as far as what's going on. When you look at this number, 26 billion of gold is traded daily. We know that's mostly paper. So whether or not this is going to take place, the LBMA declined to comment. It bears watching, and I'm going to leave it at that for now. And moving further into the precious metals, this is a possible manipulation of gold and silver prices from 1999 to 2014 with a proposed class action. Again, I think if you're in this market at any level, or at least a significant level, you certainly should pay attention to this article. We already know what Deutsche Bank has said, and this is perhaps going to go a little deeper than some people think. Certainly, I've been one that's looked at this for years and years, and every time there is a legal action, it seems to be just scoffed at and dismissed. But since Deutsche Bank has come to the fore and named other banks, and we've seen some of the emails in the public domain, this is getting to be a little bit more interesting. Also, the President administration may, and I say may, look into this somewhat, probably indirectly, but pay attention here. This could get more exciting as time wears on. And finally, we have JP Morgan manipulation lawsuit is revived by the appeals court. So as I just said a moment ago, these have been dismissed, scoffed at, and kind of several of these suits, in fact, were combined together into one case, and the court basically said, nothing here to see, move along. And the legal rhetoric was that there isn't enough to prove manipulation, move along. So I want to be fair. Nonetheless, they may be having another look now. So again, this is something to pay attention to. Will it have an impact on the market? And the answer is certainly it could. I'm going to be reserved in my judgment for now, but I definitely think that all of us that are in the precious metals market certainly need to pay attention from this point onward. And finally, the new February issue of the Morgan Report gets published today, later today actually, the 5th of February, Super Bowl Sunday. And we are telling our people on the free e-letter list that there is a situation here that will be open till the 27th of February 2017. Basically, myself and David Smith went up. I saw this chemical solution, and it's very interesting. I also put a couple videos out, so if you're interested in this, there's already a bunch of information out there for free. It revolves primarily around the electronic waste industry. And the bottom line is basically if you own the parent company, you're going to get 1 share for every 10 shares that you want. And of course, the big question is if this happens, what's going to happen to the parent company? And the answer is I don't know. I think this spin out will probably do better, but that's a belief. I do own it. Everybody at the Morgan Report does. But I also witnessed on that same trip what could take place as a adjunct to the initial parent company, and it's only getting better. So both stories are pretty interesting. It is highly speculative, not for everybody. Read the disclaimer, read the forward-looking statement, and if you're paying attention to the Super Bowl or not, have a great Super Bowl Sunday.